86% of Americans believe we should not be buying Bitcoin, or they know nothing about it. 14% understand that we should. The adoption wave of Bitcoin, it's the fastest growing adoption of any asset, of any technology, of any platform in history. Faster than smartphone adoption, faster than internet adoption. Seyr had a wonderful board that actually was fully in tune with, I don't care about the volatility. We have our company, we're profitable, we're going to use our cash, we're going to buy Bitcoin and we're going to hold it. And we understand it's going to be volatile, but this is the right way that we're going to do it. And you start thinking like, why do I have to lose 50% of my wealth because they believe they can steal from me 2% per year and that's an acceptable rate of inflation? We're barely getting started. Sub $100,000 Bitcoin is kind of like you starting out with the internet in the late 90s. You manage money for a living and you've missed the best performing asset 8 of the last 10 years. How do you justify your fees to the people who you manage their money?
How did you come to America? How did you move to Texas?
Yeah, well, actually, so my parents originally lived in New Jersey. And my father, after he was done with his military service, he was a mason. So he did a lot of home building, bricklaying, construction stuff. And he was having huge problems with his health relative to arthritis from the extreme cold and the humidity and a lot of the problems on the East Coast. And so without knowing anybody, the doctors said, if you went somewhere it was dry and hot, that would help you a lot. So without knowing anyone, they sort of picked up our family and we moved to Tucson, Arizona. And so kindergarten through 12th grade, I had 2 older brothers and myself, and we moved out into Arizona, didn't know anybody, and started our life there. So everything there originated. And then my parents, if we were probably upper or lower class, if we were lucky. So they worked really hard. We always had what we needed, but they gave us the greatest speech in the world, twofold. It was, this is the United States. If you get off your butt and you put in some work, you can accomplish anything you want in life. So you have to go put in the work and the effort, and anything good can happen. Also, we don't have enough money to send you to college. So unless you earn the right to go to college, you're going to have to start working or figure it out. So my oldest brother, worked a full-time job and also went to the University of Arizona and ultimately completed his degree. My next brother down went right out of high school into the Navy nuclear program. So he went to nuclear power school and ultimately served operating nuclear reactors on submarines in the Navy for about 15 years. Then he got out and started doing a lot of oil and gas in the Texas area. And currently he's finishing up probably the last 12 to 18 months of being an expat for Saudi Aramco. And then he's going to retire. And then myself, I worked really hard in school after I got that pitch that even my parents said, look, even if we had the money, we're still not giving you anything. You have to earn your right to go to college because then you'll appreciate it and you'll work harder. And my father was very smart. He took me and my brothers out when he was doing block work, and he would make us make the cement. He would make us carry the bricks and the block and do a lot of manual labor. And we said, you win, Dad. That sucked. We agree. God bless you that you've done this, but we're going to try a different path. And so I worked really hard in school. I was fortunate to be the valedictorian of my high school class. So that opened up some opportunities. I had received Army, Navy, and Air Force ROTC scholarships to go to college. And I also got an appointment to West Point. So I almost went to the United States Military Academy. One of the senators from Arizona also gave me a congressional nomination to go to the Air Force Academy. I thought I wanted to be a pilot. That was back when the original Top Gun #1 came out when I was in high school. And so all I wanted to do was fly. I thought that looked like the greatest thing in the world. And so ultimately I applied, finished everything. And then the University of Miami, which I have the little U on my chest, they had a unique program where if you would use your ROTC scholarship to go to college there, they would pay your room and board. And that was literally all I had left to try to pay. So without really knowing too much about it, I ended up going to the University of Miami. It was a small private school. There was probably 10,000 undergraduates. Most people think it's a big public institution, like down the street here at the University of Texas, where they have like 50, 60,000 people. And ultimately, I went there, studied industrial and systems engineering. Fortunately, I did well enough that the Army gave me an educational delay, and that allowed me to go to graduate school. So I went to engineering graduate school at Georgia Institute of Technology. We always said like the MIT of the South. And I did really well there. But now the problem was that I had 2 engineering degrees, so they pulled the needs of the Army, and they took away my pilot slot, which I was commissioned as an aviator, and they put me in the Corps of Engineers. I then went to my engineering officer basic course, if you want to call it that. And after completing it, I went to Army Ranger School and then got deployed for my first assignment in Korea during the 94 nuclear weapons inspections. So it was like, welcome to the real world. First job in life is sitting there dealing with the demilitarized zone on the 38th parallel in Korea. And that was kind of welcome to the world. So I did serve for 5 years, I guess, total in the military. And then I got recruited to Silicon Valley. I had no intention of getting out of the military. I was going to do company command and continue. Did the airborne, air assault, did a lot of those deployments. And lo and behold, I had someone come up to me at an airport in San Francisco and literally begged me to miss my flight. And I was like, why would I miss my flight? And they're like, we'll pay for it. And I'm like, you'll pay for it? Why? And they're like, well, we have a recruiting contract with Northern Telecom, and they want us to find ex-Army, Navy, Air Force, and Marine officers. And so as it turned out, I ended up in Silicon Valley because 50 of us were hired. 49 out of the 50 were ex-military officers. And we took control of the enterprise switching business of Nortel in Santa Clara. And that was kind of my foray into technology and my foray into Silicon Valley. And it was the perfect time of life to go there. I started in August of 1996. And then this thing called the internet was going on. So I kind of got buried in the middle of that. Long story short, as I ended up doing an MBA at the University of California at Berkeley while I was working full-time at Northern Telecom as a product manager for what were called private branch exchanges using a technology called ATM. Now we use IP like we're talking on now. And ultimately, it was a lot of voice communication products. I ended up getting the entrepreneurial bug. And when you're in Silicon Valley, it was kind of like you're supposed to start a company. So a guy that I met at Northern Telecom, he was, I jokingly call him my Vietnamese twin. He and I started a voice over IP company, which is what we're using to talk right here. And we actually left Nortel. We pledged our houses as collateral, got all our Dell and Cisco infrastructure, and then we built the world's first ever voice over IP platform on Linux. And ultimately, that company within 2 years was purchased for about $130 million from Cisco Systems. And then we worked there for a bit. So after my time in Silicon Valley, and then I spent about 5 years there. I spent about 7 years in Newport Coast. And by then I was married. I had 4 children, and I didn't want them to grow up in the People's Republic of California, which politically, even back in the early 2000s, was getting psychotic. So we uprooted, moved to Texas, and that was kind of how I ended up in Austin, and then started a company that ultimately led to me doing the same thing all over again with the same group of people. The first 3 companies we successfully sold, first to Cisco Systems. We did 2 contingency business models of the first. One was called a hosted communication provider. Now you would call it the cloud. And we built and sold that to level 3 communications. And then we also, to make the service work, we had to create a hardware box that would actually do NAT, firewall traversal, traffic shaping. And remember back when you used to do these conversations where the video would freeze or the audio would stutter. So we had to optimize, and we created a box to actually make sure that you and I could talk without any of those problems on an environment like this. And ultimately, that company was purchased by a company called Ribbon Communications. And so I just found myself kind of being a non-recovering serial entrepreneur. And between operating and selling them, when I finally started a company called Funware, Me and our co-founder had made enough money that we just said, come hell or high water, this is going from zero to either NASDAQ or the New York Stock Exchange. And so I ran from a founding CEO. We raised $100 million while we were private, took it public on NASDAQ, and then ran it for another 4 years, including the COVID period. And that's just kind of been my life of doing this over and over and over again. And then sometimes taking the proceeds and buying assets, which is where I got a lot into Bitcoin. And then where I also did investments in companies like Vonage and Ring Central that happen to, also create services like this, because we're using Riverside. But you and I could have used GoToMeeting or WebEx, which is now Cisco, Ring Central, Vonage. We had all these options. And I didn't really think I would create a career of entrepreneurship, but that was kind of the short answer of how all that happened.
That was really, and now we really got a good answer to how did you came to Texas and all that thing. Really, really cool. And how did Bitcoin make sense for you with the military background, with founding companies, with the internet adoption, living through the internet adoption? How did Bitcoin make sense for you there?
Well, so there's a number of things. There's a great book that Michael Lewis wrote called Liar's Poker. He's the same guy that wrote Moneyball and The Big Short, which became great movies. But Liar's Poker was all about wealth management. And he used to comment being in his 20s, knowing absolutely nothing. And they would hand him millions of dollars to manage on behalf of other people's money. And he would get paid 300, 400, 500,000. And he's like, I have no idea what the hell I'm doing. Why do these people give me this money? What's going on? And so when you read that book, you sort of realize like, wow, I really need to learn about money. And I thought I could trust a third party to know what they're doing, but this is a disaster. So, when I had sold the first company to Cisco, I took me and about 7 other people because we made so much money. And, I organized a deal with Goldman Sachs Private Wealth Management. So I was thinking, great, like Goldman Sachs, this is the gold-plated best on the planet, and I'm going to get to have their help managing my money. And then I realized every time I would go meet with them that I felt like I knew more about the markets, and I felt like I had spent more time learning about what was going on in the economy and on Wall Street. And I felt like I was talking to, folks in their 20s who were very well-intentioned, very smart, but they were trained to believe the best product on earth is a Goldman Sachs product. So, you want a fund? Well, it's a Goldman Sachs fund. And if you said, okay, what are physical assets? What are financial assets? What are virtual assets? They would give you a strange look, right? They would just think, okay, physical assets, I get it. Gold, silver, real estate, card collections, artwork, okay, I get it. Financial assets are like, okay, stocks and bonds and ETFs and all these things. And then it's like virtual assets. What are you talking about? And I'm like, well, like digital assets. And they're like, what do you mean by a digital asset? And then I'm like, Bitcoin. And they're like, oh, no, we don't touch that. We're not allowed to do that. That's very, very risky. That's, high risk, high volatility. Like, are you crazy? It's like a 60-40 bond portfolio equity split. And I'm just like looking at him and didn't understand it. And what I really understood after the Liar's Poker and those interactions was that nobody cares about their money more than I care about my money. And I shouldn't be outsourcing the most important part of my life, which is my wealth, my personal sovereignty, and the approach that I take to combat the fraud of every central bank on earth and the Rothschild family bank, which we like to call the Federal Reserve. And the more I dove into the history of currencies and money and trading, and then watching what I was doing as a CEO in the way private equity worked and venture capital worked and angel investment worked. And then when you go on these paths and you end up in the public markets on Wall Street, you just realize it's all bullshit. It's all fraudulent. The whole system is a casino. And the whole concept wasn't that anyone on Wall Street was so brilliant. It was basically that they were getting to do insider trading in a legal way. They could put themselves in their own IPOs. They could manipulate the way IPOs worked as to who got rich. And then, we have to protect you as an institutional accredited investor. So, Robin, you're not allowed to buy that IPO because it's risky. Well, it's risky when it's priced at $15, but when it opens at 60 or 90 or 100, then we'll let you buy, Robin, because now it's no longer risky for you to buy it at 400, 600, 800% higher. And the longer you spend time just peeling back the onion and working through it, the more you realize something's terribly wrong. So with Bitcoin, I felt bad that I got into it a little bit late. Obviously, it was around as we were getting through the 2008 explosion of the financial markets during that bubble. That was the bubble after the bubble I saw with the internet and technology in late 2000. And then you kind of realize, okay, these people managing the economy are like, asset bubble, blow it up. Asset bubble, blow it up. Oh, how do we solve the problem? Just print money. Well, wait a minute. When you're printing money, you're stealing from me. And then you start going through all these crazy things about, okay, wait, why is 2% inflation okay? That's just 2% theft. Why? So then I started doing the math because I'm an engineer, right? And you said, okay, if you and I work from like we're 20 to 70, that's about 50 years. Let's say you worked from 22 to 72 or 18 to 68, so somewhere in there, 50 years we're going to work. 2% inflation, because math means that we're going to lose half of our wealth in fiat dollars. Half. And you start thinking like, why do I have to lose 50% of my wealth because they believe they can steal from me 2% per year and that's an acceptable rate of inflation? And that was frustrating. More recently, because math, we've watched nearly 80% of US dollars in the history of the world have been created over the last 5+ years. Well, what does that mean? Well, okay, if the target was 2% inflation, you and I could look at the PPI and the CPI and what the real basket of inflationary goods were, like when I was born in 1969. If you don't change the definition, inflation was probably 25% or more. So then you're going, wow, they're saying 2. It's over here at 25. So while I'm running a public company, I assumed our cost of capital was 25% per year, whether that was, just a way to be safe or not. That was how we thought of it. But let's say you don't believe 25 is too much, 2 is too little. Let's pick like 14%, somewhere in the middle. Well, at 14%, in 5 years, you lose half of your wealth because math. Half in 5 years, which is what's happened to every American and anyone there that's pegged to the US dollar. That inflation is devastating. So Bitcoin to me was like, oh God, why did I miss this when it first came out? And it's mostly because I started the company that became publicly traded on NASDAQ February of 2009. So that's really close to when Bitcoin, the white paper was published, things are starting to get rolling. But ultimately, I was so consumed in the first 5 years of building a startup, raising money. We did 20 million the first 5 years, and then we did a couple institutional raises in the next 5 years of first 20 million, then 30 million, and so forth. So while you're doing that, I sort of missed Bitcoin for a while, which is crazy because I was from Silicon Valley. I was deeply in technology. I followed all these things, but it was really, I probably got really, really deep down the rabbit hole in probably the 2016 halvening and cycle. Going through the 16 halvening, the 20 halvening, the 2024 halvening, by now it feels like really old time. And back when I was getting involved, you could still get Bitcoin, under $1,000. I wasn't as good to catch it under $100 or under $10 to start at least, but at least that idea of seeing the difference between an asset growing at way more than 50% combined annual growth rate, you're like, oh, even if it's 25%, 50% or more, my purchasing power isn't getting decimated. My cost of capital isn't getting decimated. So ironically, I ended up raising money as a private company where you could use US dollars, Bitcoin, or Ethereum originally. Because I said, I had people asking me, I said, hey, I've got Bitcoin or Ethereum. Can I invest? But I want to use that. And that sort of compelled me to get very deep into, wait a minute, what are these things? Why are they wanting to give them to me? And then finally we just said, sure, we'll take Bitcoin or Ethereum. Very rapidly, I converted all the Ethereum into Bitcoin. But then 10 years as a private company, I had already had a bunch of Bitcoin on our balance sheet. So when we went public, I literally had balance sheet Bitcoin before Seyr. Seyr didn't come till later. He had a much bigger company though. And then when we went to do our registration statement to go public, I was the first company that ever went through the cryptocurrency and blockchain part of the Securities and Exchange Commission. So the way that process works, you submit your registration statement, the SEC reviews it, gives you responses, questions, you have to revise your registration statement. Well, ours, those usually take 3 or 4 months to do that. Ours took 8 months, 8 months. Because the only thing worse than going through all of that with the Securities and Exchange Commission once is having to work with 2 groups in the Securities and Exchange Commission, the traditional group and now this brand new blockchain and cryptocurrency group. Through that process, we discovered they were asking us, well, how should you cast this on your financials? And we're like, well, you're the Securities and Exchange Commission. You know, you're FASB, like the Financial Accounting, Standards Board. You control GAAP accounting for all public companies, everything on NASDAQ and the New York Stock Exchange, and you're asking us? So we're having these debates with them, and they escalated it to what they call the Chief Accounting Group or the Chief Accounting Agency within the Securities and Exchange Commission. And we're having this open discussion about what do we do with Bitcoin on our balance sheet? And at the time, there were no rules. So they said, what do you think? And we're like, I think it should be mark to market because there's a 24/7, 365 market. Yes, it's highly volatile, but we should just market to market and whatever it is, it is. And there's a public, persona for that. Well, ultimately we get everything approved. I think we were the first company in the history of Wall Street that got through the registrations process without any rules from the SEC, but which we selected to file our 10Ks, our 10Qs, and we kept all the Bitcoin. And then once we got a registration statement, we used an ATM or an at-the-money registration statement to start raising cash to buy Bitcoin. Sound familiar? But we did, all of that. Like we were kind of like GameStop or AMC before everybody learned about naked shorting and all these crazy games and the meme stocks. And then we were doing what ultimately MicroStrategy did, but we did it far earlier than them, and there were no rules. So we suddenly got into this weird dynamic where finally the SEC did the most punitive thing it could do, which affected us. It affected Strategy and all the others. They said, okay, if you buy Bitcoin, let's say you bought it at $50,000 for easy math, and it dropped to $25,000, and now it's trading at $85,000. Well, what they said is if you bought at 50, anytime the price drops, you have to take an earnings per share one-time loss for the amount of money below the $50,000 purchase price. And you basically have to hold it that way. Now, if it went down to 25 or even 15 like it did, and now it comes all the way back up, you can't take any gains. There's no unrealized gains, but you have to recognize the losses. So it forced you to write down any Bitcoin you purchased at any price to the lowest possible value it ever traded at since you bought it. But you could never get the economic benefit for any reason until you sold it. So now that changed as of the start of this year, right? They said, okay, now we're going to market to market. So people were waiting, okay, Seyr, when are you going to recalibrate your balance sheet and your P&L to reflect its current value? And they deferred that for quite a while because there was a window where it was optional. And so it was just so strange. Personally, I just kept buying Bitcoin and stacking it, right? And you learn to hodl and make sure your stack never gets smaller and you just keep building it up over time. But that was easy to do personally. That was really hard to do in a public company. because the public company is governed by directors, and then everybody's got to approve it, and then your auditors have never seen this stuff before, so they're terrified to go, well, we're the big four, we can't mess up something because there's no rules. And that was just a fascinating process to arrive finally, where now it's like, oh yeah, people are buying it for treasury. Oh, GameStop's going to do it now. All these companies are doing it. MetaPlanet over in Japan is doing it. Everyone's suddenly doing it. Semler Scientific. But back when we were doing it, like, we had more Bitcoin on the balance sheet when we were private as a company than we did it when we were public. But it was just fascinating to see the chaos, the sheer chaos of it. But then you become an evangelist, right? Personally, you become an evangelist in corporate, and then everyone's got to go through a process of either being hurt or have something stolen or lost to realize, oh, there's Bitcoin and there's shitcoin. There's scams and there's Bitcoin, and all of that makes you become a Bitcoin maximalist. But I almost think, every 4 years we have a new wave of investors in crypto. And then they're taught, oh, you go to Coinbase and create some diversified portfolio of these digital assets, which is absolutely dumb. You should just say, I go there, I buy Bitcoin, I self-custody, bingo, I'm done.
That's such an interesting story. I never heard that. I always thought MicroStrategy basically was the first company that took it public. So you were actually with the company, the first publicly traded company on the NASDAQ that had Bitcoin on the balance sheet. You said you had less Bitcoin publicly. Did you sell in the process of getting public?
So, the whole process of when we went through it, initially we were just maintaining the Bitcoin that were part of our private financings. So in the last $50 million we raised privately, we ended up having probably the most Bitcoin during that raise. Now, there was lots of cash investors. We had a sovereign fund with like $20 million. We had corporations and venture capitalists and all that. But a lot of the angels were the ones that we would see, or the big family offices were the ones that would have cryptocurrency. And so if they gave us Ethereum, we would convert it. If they gave us Bitcoin, we would hold it. So initially, the process was just letting the Bitcoin sit on the balance sheet and holding it at the cost we received it at. We weren't even marking it up or down. When we went through at the SEC, we didn't realize what a circus it would become. And then when we started trading, it was funny along the way, our board, 1 year for our strategic plan, I asked our chairman of the board, who was an ex-CFO of JP Morgan's investment bank, I said, all right, you play the role of defending the US dollar for our strategic plan, and I'm going to take the role of defending Bitcoin for our strategic plan. And that process, very unlike Seyr had a wonderful board that actually was fully in tune with, I don't care about the volatility. We have our company, we're profitable, we're going to use our cash, we're going to buy Bitcoin, and we're going to hold it. And we understand it's going to be volatile, but this is the right way that we're going to do it. I had a board composed of people, none of which had ever bought any cryptocurrency. They had no Coinbase or Kraken account. They had never linked their bank account to Coinbase or anything like that. They had never used decentralized finance. They didn't know what Uniswap and SushiSwap were. They had no idea the difference between Bitcoin or anything else. They had never bought or custodied Bitcoin. So basically, I almost had to say, okay, we're going to get $100, little amount from every one of you, and you have to do this. And they're like, oh, I'm busy. And then I'm like, you have to do this. So we would have very contentious board engagements because I was the founding president and CEO, dragging people to look at this stuff, to pay attention, to do the homework. And what you realize is that it's great if you can get a group of people where, everyone is on board with the same ideology and they understand inflation and money and the history of collectibles and stores of value and mediums of exchange and units of account or measure. But what you realize is the fiat brilliant were Bitcoin stupid. And that's a hard thing for really bright people who sit on boards to believe, that they're that juvenile about their mental understanding of something other than the Federal Reserve and the US dollar. Their view was the US dollar is the most conservative thing in the world, like buying treasuries. And I was like, are you out of your mind? I said, what's the supply of dollars? I don't know exactly what number of dollars are there. And maybe they could go, well, I could look at M2 money supply. And I'm like, okay, and you trust that the graph is accurate, that you know exactly as they're printing that money what the supply is? I said, I will suggest to you that it's the world's assets divided by infinity, which you can't solve that math problem, versus, the world's assets divided by 21 million. And every 10 minutes, I have an open, candid, transparent, fully audited public record with a ledger that shows specifically how many Bitcoin there are. And we always know the math. So why do you think that you not knowing the math is more conservative than us knowing the math? I said, when has that been audited? It's like gold. When has gold been audited in the United States? Decades and decades and decades. No one even knows if it's there. Nobody knows if it's been rehypothecated, pledged out. Oh, but it's the hardest asset in the world. Well, no, that's Bitcoin, actually. So when you go through those mental conversations, it's brutal with a board, and it's even more brutal when you go out to deal with Wall Street fund managers. I mean, we did enterprise software. We made beautiful things that were like applications on the phone. And those apps had our software in it. That was the cloud business, so we'd license software. I did our roadshow, and people said, Alan, what's an app? Imagine that. What's an app? And my CFO and I are looking at each other going, are you kidding me? You don't know what an app is. Oh, okay. So you're starting at that level, and I'm like, wait, you manage $10 billion? I'm like, wait a minute, you're just making fun of me. Come on. Pull out your phone. So they'd pull out like a flip phone. And I would just go, oh my God. Then other ones would pull out like an iPhone. And you're like, okay, you see that little thing on there? That's an app. Do you do your banking? Do you do it for travel to get your boarding pass? Like, that's an app. And when you're realizing that these folks manage that much money and they don't have the foggiest idea, enterprise software shouldn't be a hard category to understand. I mean, Adobe, out your way, SAP, these aren't small companies, right? So theoretically, they know that, but they don't. Then within that, they don't understand the verticals and the things. And then if you're trying to talk about treasury, it's like their mind explodes because you're trying to tell them, I'm being conservative. That's why I buy Bitcoin. I only put the corporate money and personal money into Bitcoin that I can't afford to lose. And they're like, no, that it's the opposite. I'm like, no, you're just wrong. So you get into these bizarre debates. Like, look at the strategic Bitcoin reserve. 86% of Americans believe we should not be buying Bitcoin, or they know nothing about it. 14% understand that we should. My goal, Seyr's goal, lots of your goal, and all this work that we do to evangelize and help people understand is because we want that to be 86% want to buy the Bitcoin and maybe 14% don't. And what you realize is, whenever I have all these wealth managers pitch, Robin, you go make a bunch of money, you sell a company, they're going to be like, hey, come meet with us. We want to help you manage your money. And what you should always do, and I tell everyone, walk in and say, what percent of my portfolio should be in financial assets? What percent of my portfolio should be in physical assets? What percent of my portfolio should be in digital assets or virtual assets? And they always, never still to this day, know what the last category is. So I said, okay, make this easier. Financial assets, physical assets, Bitcoin. What percent and why? And often you would hear, our firm's not allowed to buy Bitcoin. Our firm's not allowed to cold storage Bitcoin. Our firm is not allowed to pitch you investment products. Our firm is not allowing anybody to buy the Bitcoin ETFs from BlackRock or from others. And you're kind of like, wow, so you manage money for a living and you've missed the best performing asset 8 of the last 10 years. How do you justify your fees to the people who you manage their money? You successfully kept them out of the best performing asset on earth for basically a decade. Why are you employed? Like, what value do you add? And that gets to be very bizarre to have those kind of conversations. But when you really peel back the onion, you realize people don't understand anything about the history of money. You know, if you said, okay, we had 5,000 years of gold, 100 years of a failed fiat experiment on the US dollar, and now we're going to go to 5,000 years of Bitcoin, they would think you walked in with a gun and shot a kid in church. That's kind of how they equate that analogy, right? They think it's crazy that you would speak that way. And then you say, but Bitcoin, you don't have to trust a politician. You don't have to trust a banker or a central banker. In fact, why do we even have central banks? Bitcoin could run the function of a global reserve currency like a central bank globally, 24/7, 365, with no holidays, no weekends, no trading hours. And it would work because code is law. We don't need to trust people. The code is the law. And it works because inherently nobody trusts each other. So you can verify that. And math is more powerful than your emotions and your feelings. And you, who is closest to the money printer, who wants to get rich by stealing from other people through income tax or through the debasement of our currency.
Let's take a break for a moment and appreciate the beauty that Coin Vigilante has made with the Bitcoin watches. Those watches are the most amazing, the most elegant way of showing that you are a true Bitcoiner. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there, and of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. And now if you have Bitcoin, I really do hope that you don't have it on exchange. But if you do have it on exchange, I have 2 ways for you to deal with that. The first way is you put it on a hardware wallet. That's the entry for you to get into the self-custody game. I recommend BitBox, Bitcoin only edition for that. It's a super simple and secure way. And if you check out the link in the description, you even get 5% off if you use the code Robin. And the second way is the Bitcoin Way. The Bitcoin Way is your all-in partner in terms of how to get the most out of your sovereignty. They will personalize for you a self-custody setup that is perfect for your individual situation. They will show you how you can secure your own devices. Securing your Bitcoin is not enough. You also have to keep all your devices secure. One topic that is overlooked often is the inheritance plan. What happens with your Bitcoin once you are no longer here? Do you have a plan for that in place already? And last but not least, if you're in jurisdictions where you don't feel safe, it's better to get a plan B. For all that, head over to thebitcoinway.com/Robin to get a 30-minute free call. And just a quick side note, I will be for the first time ever speaking at the Bitcoin Prague event in June. It will be absolutely legendary and I'm really looking forward to seeing all of you there. You can get your ticket in the link down in the description of Bitcoin Prague, and very important, use code Robin to get 10% off your ticket. I'm really looking forward seeing you there. That was really good. And with your background, it's also really interesting to see how you look at recent developments. I mean, recent, it's with BlackRock ETF, it's almost 1.5 years ago now. But there's also the FASB ruling. There's like the SAP 121. There's a lot of things going on. The that allow institutional buyers to buy it more and to buy it easier. And also there are way more examples now with strategy with GameStop. I always wanted to say GameStart, Game On or something like that. And there are just way more publicly traded company now that set an example. How do you look at how fast this adoption wave from an institutional level could actually go now? Now we have basically the legal frameworks in place and really great examples also.
Yeah, so at a simple level, this is just back to the future kind of moments for me, because I'm going to be 56 years old this year. So I've lived through wave after wave after wave of adoption. And in fact, my career when I got out of the military started right at the onset of the internet wave. So living through that wave, and everyone thinks, oh my God, Bitcoin's at $85,000 and I've already missed out. And I'm like, honestly, we have not even scratched the surface of getting started. The adoption wave of Bitcoin, it's the fastest growing adoption of any asset, of any technology, of any platform in history, which is crazy to say. Faster than smartphone adoption, faster than internet adoption. And I'm talking about adoption being the number of total Bitcoin wallet addresses in the world, much like you would say total number of internet users in the world, total number of smartphone users in the world, those kind of metrics. But this is like 1997, 1998 adoption terms if we were going to compare it to internet adoption. Well, what happened at the end of the late 90s? If you were buying Amazon, Google, Apple, Meta, all these things, Netflix, and don't forget, what was Netflix supposed to be? It was a DVD rental thing, not a streaming thing, right? So there's tech being done as you're going to end up to where we're at. But to me, we're barely getting started. Sub $100,000 Bitcoin is kind of like you starting out with the internet in the late 90s, and then you get to enjoy the next 2 to 3 decades of up and to the right growth. You can invest in Bitcoin as like buying Apple or Amazon or Netflix or Meta or Google, like when it was a very small market cap company under $100 billion. And what happened over that 20, 30 years? Now they're up in the trillion, $2 trillion, $3 trillion. So Bitcoin might have 10x'd, but it's like Seyr. Look at strategy. They were at a couple $1 billion of market cap. Now they kind of bounce around 60 to $80 billion of market cap. It's very easy for me to see how they're going to go up 10x to 600 to 800 billion. And then they're probably going to double or triple, and they're going to get up into that multiple $1 trillion range. Now, why and how does all this happen? It's interesting because, I saw all this with a corporate thing. So like strategy and Michael do a great job of getting corporations and governments to understand it and adopt it. But what about individuals? So what I did is I took my own personal wealth management. I manage like 30 accounts every day. I've got my kids, my mom, my friends, some colleagues. I've got LLCs. I've got funds that I manage where people have created capital accounts. They put their money in and I invested on their behalf. And what did I do? I open sourced and publicly posted what I called my Bitcoin personal wealth flywheel for individuals. I said, we already see a strategy of a flywheel for corporations. How do I do that as an individual? So I posted it. It's at my pinned tweet, which is at Alan Knit. And I said, hey, this has worked for me, and I'm destroying every comparable benchmark by doing this model. And I've been very fortunate and blessed and started from zero and made a good living. I've put my life on a Bitcoin standard. I'm remarried with 7 children that are kind of from 19 to 26. They're all starting their careers and they're all on Bitcoin standards. It's absolutely fantastic. So what was that model? It's really simple. I always tell people who said, hey, I'm living paycheck to paycheck. I don't have any cash. I don't have any money, whatever the issue is. I have literally tried to train my children since they were kids and everyone I meet they're probably sick of hearing from Alan about, look, you have to pay yourself first. If you have a child, they're 10 years old and they get a $100 gift from their grandma, great. You should take that $100 and you should immediately take $10 or 10% out of that and say to the child, here's $90. I'm going to let you buy something. The other $10 we're going to send to your Schwab account. And we're going to invest your $10 and we're going to get you used to living off 90% of your income. So at a minimum, the worst case is 10% of your income will be invested into an account that you can control. And so it starts there, but that's graduation gifts, birthday gifts, grandparents pass away and leave a little bit of money to kids. You whatever that looks like, that money is going to go into those accounts. So what do I tell them then to do? I've trained them to say, okay, now that we're in 2025 and all of this noise of assets and ETFs and things that didn't exist before now do, what do we do? That 10% goes in, 40% I basically work to get converted into cold storage Bitcoin. So of all the money that goes in, whether it's they link their account to Coinbase or Kraken, I prefer Kraken over Coinbase, but that's just tomatoes. But I teach them to basically take 40% to buy actual Bitcoin. The next 20%, I teach them to buy the BlackRock Bitcoin ETF, IBIT. I picked that specifically because it's the most liquid ETF in the world for Bitcoin. It has the most liquid options market in the world for Bitcoin. And it also works in accounts where you're getting paid in fiat and you don't necessarily, not everyone has the ability to go to Coinbase or Kraken and go through that process. So, or they may have a retirement account, which they can't self-custody actual Bitcoin. So it at least gets them an approximation. So that's 20% of the portfolio. So that basically means 60% is just pure Bitcoin, with the first 40% being actual Bitcoin, the next 20% being, let's call it financial Bitcoin. The next 10% is actually MicroStrategy because that's levered Bitcoin and they now own almost 550,000 Bitcoin and growing. And that gives me the volatility in the price of MicroStrategy overlaid by the volatility in the price of Bitcoin. And I get exposure to the greatest corporate treasury management system that I've seen. So that 10%. The next 10% is a recent change. Now it goes into GameStop because I've seen what happened with strategy and I expect that the same will happen with GameStop. They are a profitable company with cash flow. They had cash on reserves. They raised more money and they have up to debt-free and $6 billion plus to deploy on corporate strategy. So if their treasury strategy is going to do what Michael Saylor and strategy did, that 10% looks fantastic. And I still believe that there's a ton of shorts and other things that were never closed out through synthetic shorts on the old meme stock thing. And that, Roaring Kitty and Ryan Cohen are going to do a great job. So now we're at basically 80%, right? We had 40% physical Bitcoin, 20% financial Bitcoin, and then the next 20% is split equally between MicroStrategy and GameStop. So now what do you do with the last 80%? Well, what I did is I came up with 4 ETFs that pay dividends. One of them, YBTC, which is a yield max product, pays Bitcoins every Friday. So every single week on Friday, you get dividends. And guess what you can do with that cash? You can dollar cost average more IBIT or MicroStrategy or GameStop, depending on if they've had some dips. And that solves the problem of I have no cash to invest. I have no money to redeploy. I can't buy the dip. I'm all out of dip. I'm all out of money. So 5% goes into YBTC. Another 5% goes into MSTY, which gives you the volatility of MicroStrategy. That pays monthly. Another 5% goes into YBIT, which is another monthly paying dividend. And the final is Maxi, MAXI, which also is a monthly paying dividend. So what does that mean for me is that once every Friday, I'm going to have dividend payouts. And then on the other 3 weeks of the month, I'm also going to get supersized with an MSTY, a Maxi, or a YBIT dividend. And what do I do with it? Again, go right back into IBIT. or I can, if there's a downdraft in GameStop or MicroStrategy, I can build more in that flywheel. So that's the base of that 100% investment. But I also do some extra things to generate even more cash, which is now that I have an IBIT position or a MicroStrategy or a GameStop position, I can write covered calls or cash secured puts. And in both cases, so let's say MicroStrategy is trading at 300. For this week, I could write cash secured puts at 250 and I could write covered calls at 350. And the real goal is to let MicroStrategy sort of bounce around because the expiration is only 2-3 days in the future, like today, because the last trading day of the week. The likelihood it's going to jump up 50 or down 50, it could happen, but it doesn't happen very frequently. On the covered calls, they expire worthless. But what did I do? I got the option premium, which gave me cash, which I can go back and reinvest. On the cash secured puts, I get premium, which I can reinvest or hold for more cash secured puts the following week. And so what I found is it's this wonderful flywheel where you're getting the most pristine asset in the world that has this on average 50% combined annual growth rate. Even if it drops to 45 or 40 or 35 or 30, great. But now I've got this wealth flywheel just spitting cash in the fiat world. And it gives me a concentrated position. I think last year, it was a triple digit gain. I expect this year is going to be, wonderful as we're getting real close to where Bitcoin on a trailing 100-day basis is going to start emulating the M2 money supply with a high correlation. Gold has already done its move. Bitcoin usually follows alongside that 100-day lag. So I'm just smiling ear to ear because I know what's about to happen. And meanwhile, I'm nonstop. Right before we talked on this podcast, I was writing some options, collecting the cash, redeploying. And today, because it's a closed trading day tomorrow, YBTC paid out all its dividends. Next Monday, YBIT will pay out its dividends. So that last 20%, if you only want to pick 2 instead of 4, I would say I would just pick YBTC and MSTY and just do 10 and 10. If you want more diversification or exposure to a little bit different things that bet on the volatility of Bitcoin on one side and MicroStrategy on the other, you could use all 4. But worst case, you'll get a single payment every single week. And then once a month, you get a really big MSTY payment. And again, I'm just trying to solve for how do you make this easy for individuals? And how do we make more people get more wealthy and more protected? Because I don't see a lot of people getting a 25% plus annual raise. Their compensation right now is not typically going up 25% year over year to keep up with that nightmare of inflation that's getting printed away. But Bitcoin becomes that solution.
That's super interesting. Is there an argument to be made? Like, for example, I have not a different strategy. I'm just 100% in Bitcoin.
Sure.
I said I focus 100% on building this podcast, building this thing here, and whatever comes on top of each month, I just put 100% self-custody in Bitcoin. Very boring, very simple strategy. What is the strongest argument for someone that is already 100% in Bitcoin to say okay, maybe I should take 10% or 15% of my Bitcoin and actually do this financial engineering with MSTY and YBTC?
Yeah, so I think the biggest reason why is that most people, so you're unique, right? Because you're doing your own podcast, your own content. All the money that you're receiving in fiat, you can instantly convert to Bitcoin. You can self-custody it. I don't have any criticism of that at all. The reality, so my wife is a dentist. She runs her own practice. Lawyers, doctors, lots of people who are professionals. They're getting paid W-2 payment, right? So they're going to get paid in cash. They may have a mortgage of the house they live in. So that's fiat, though, right? The value of the real estate isn't necessarily going up. It's the currency is collapsing. But the effect of that is the real estate, at least it's a hard asset and it's going up, very consistent with the rate of return of the stock market. But the big thing is that a lot of those places will have 401ks. Or you can contribute once a year into a traditional IRA, depending on if you make over $150,000, or a Roth IRA if you're under $150,000. So the big benefit is, so take my kids are great examples because they're like, call it, 19 to 26, and 6 out of the 7 are really from 23 to 26. So think about it in those terms. They're getting paid in W-2. Now, many of those kids, what's the first thing they do? Their W-2 payroll doesn't go to a bank and get paid in fiat. It goes to Jack Mallers and Strike, and it instantly gets converted to Bitcoin. And then they use a credit card to pay their bills or their expenses for during the month. And then Jack Mallers built in, the entire transactional history of, okay, you bought Bitcoin at this. Here's your bill pay feature within. They're going to sell the minimum amount of Bitcoin. You may have a loss or gain as long as the taxes are going to treat it like, a commodity. Maybe if Trump declares it's a currency, then all those taxes go away. But in the interim, it'll say, okay, you bought Bitcoin at this, it's up or down, that's a gain or a loss. It keeps the tax records, that's good. Then they just pay their bills through it. And what they do is they try to build about a 3-month minimum, 6-month maximum of Bitcoin at strike. Because as time's passing and Bitcoin goes up in value, much like Jack, experienced for himself, his life gets cheaper. So then you're selling less and less Bitcoin to cover the expenses, and you're stacking sats, and you're getting more and more of your Bitcoin stack. So what all my kids will do is say, okay, I need a minimum of 3 months to cover the float on my expenses, a maximum of 6 months, and then anything that's 6 months or above, then it goes to self-custody. And they just keep putting that away so you don't have the exchange risk. But the process they use is that. Now, when they have 401ks, like most people in the United States and a lot of places in the world, if there's some kind of retirement that you have to buy into, like traditional or Roth IRAs, you can't hold all Bitcoin to do that, right? So first, you're getting pre-tax dollars going into those. They max out at like $6,500 per year for younger, I think it's like $7,500 per year if you're older. But then the reason you want to have those IRAs, a traditional IRA, you get to grow all the assets tax-free up until you withdraw them in retirement. A Roth IRA, if you qualify and do that, not only does it grow tax-free, but when you withdraw it, it's tax-free. So that's a big, big deal. So what all the kids do, and what I encourage everyone to do, is help your kids max out their contributions every single year. And then when they get older, think about what I just said on all those dividends. I'm not paying any income tax on any of the dividends. All of the reinvestment in all of MicroStrategy or GameStop or Bitcoin through the IBIT, they're just plowing into that savings model that looks a lot like what you're doing, except in those retirement accounts, 401k, traditional, and Roth IRA, mostly you can't self-custody Bitcoin very easily, even if it's a self-directed IRA. And with 401ks, of course, your corporation will say, okay, we'll put in money, you put in money, here's your percent, and they're mutual funds. You have no option beyond mutual funds. Most all 401ks, they don't have Bitcoin as even an option. Really progressive ones might allow you to buy a Bitcoin ETF like IBIT. But the reason for having these other mechanisms is, traditionally most people's lives will be fiat. They're paid in fiat, their bonus is in fiat, their commissions are in fiat, your payouts from corporations are in fiat, whether it's euros or dollars, doesn't really matter. Your retirement might be in fiat, your home is in fiat, a lot of your collections of artwork is in fiat, baseball cards would be fiat, gold and silver, a little bit different. But the idea is that everything you're doing in life almost forces you to be in fiat, just like being a student and tuition and whatever sort of grant money you're getting or whatever sort of scholarship money. It's all fiat again. So because fiat exists, I came up with this model so that anybody independent of not being able to do quite what you're doing, whereas all I have is Bitcoin, everything I get paid instantly goes into Bitcoin, there's probably an operating assumption, like you're single, right? It's different if you're married. If you're single or married, then there's with or without kids. Now there's a new company called Meanwhile, which is going to do Bitcoin-backed insurance policies. So that's the other thing. Like I'm older, right? These things didn't exist. Me and my wife set up a life insurance policy so that if either of us die, everyone's got enough money. Or if we both died on a plane, God forbid, the kids have enough money. So, but if you set up could be a $100,000 policy or a $10 million policy of life insurance, well, if you die instantly, then okay, that $100,000 to $10 million might really be worth close to what the face value of that insurance policy is. But if this is like paid out in 5 or 10 or 15 or 20 years when I finally pass away, or something like that, that money 5, 10, 20 years in the future is not still worth $100,000 to $10 million, because now it has to account for the debasement of those insurance policies. So I think you go through stages where my model is set up, whether it's a child, whether it's you by yourself, you with your wife, your parents, kids, it's sort of managing everything that you have to think through. And then if you can be a little more pure about it because it's just you, that's understandable. But when you get married, something changes. When you have a child, something changes. When you have multiple children, something changes. In my case, I was married for over 2 decades. Never thought I'd get divorced, but did. Never thought I'd get remarried, but did. Then you suddenly went from, 4 kids to 7 kids. And, post-divorce assets, but then you're recombining other assets. So you have all this stuff that gets into estate planning, medical directives, powers of attorney, efficient transfer of wealth. God forbid someone passes away, and all of that. So what I found is, you have to teach the next generation, because when you go to school, like I have 3 degrees. I have a lot of experience. I have a graduate degree from the best engineering school in the world for the last 20, 30 years in my field of industrial and systems engineering at Georgia Tech. I have an MBA from one of the best MBA programs in the world at UC Berkeley. But despite all that, I can tell you through all those courses, nobody taught me about money. Nobody taught me about managing money. Nobody taught me about earning a great living and then how do you make sense of it afterwards. They don't teach you how to trade covered calls. They don't teach you how to trade cash secured puts. They don't teach you how to roll over your 401k every time you leave a company and make sure it's in either a traditional IRA or hopefully a Roth IRA if you qualify. All these things just aren't taught anywhere. So you basically, even when you get a great education and then you get a great job, now you still have to figure out all of this money stuff that most people say, I just outsource that. Well, I'm saying you can't. Then with my own kids, I'm like, hey, I will help you tirelessly until my last dying breath. But if I'm dead, do you know how to do all this yourself? And so as a parent and as a stepfather as well, I literally sit down. I'm on the phone over Christmas or the holidays. We're sitting at the computer. We're talking with the kids. Here's how much money you make. This is the way the world works. This is where you're going to deposit that money. So every kid that I have, maybe they started with a custodial account because they were young when they were 5 and 7 and 10. Now they have a brokerage account because they're 18 or older, or the custodial account has expired. But then every one of them, they also have a traditional IRA and a Roth IRA. And then on top of that, now they're getting great jobs. I've very blessed my 3 step kids. One's a nuclear engineer at Los Alamos, deals with weapons. Another one is graduating next month, and she's going to be a nuclear engineer for Duke Energy doing reactors. The other twin is about to start medical school in July, and that's on my wife's side. And then on my side, I've got 4. One who's a student studying business and entrepreneurship. And then the other 3 have already graduated, and they did a lot of business and entrepreneurship like me. But in all those cases, now they're suddenly realizing, oh my God, now I've got to manage all this. Now they're getting income. They have 401ks. Sometimes they have matching, sometimes they don't. Los Alamos is a government entity. Duke Energy is a publicly traded corporation. So you're getting those dynamics. Some match, some don't. Some don't even have equity. So all these decisions have to go in. And then as they start, they're all single now, but as they start deciding I'm going to get married, now they've got to manage that. Then they've got kids. Then they got to manage all of this. And so we spend an immense amount of time about, think of how progressive it is for kids coming out of college, getting a job, and their W-2 payroll goes to strike. And then they're using a bill payment mechanism to stack sats, that they've been trained to take 10% off the top, and they invest religiously. Honestly, if I could get everyone on the planet or everyone in America to do what I'm suggesting, they would all be unbelievably wealthy when they get to be 60, 70 years old. It's easy to become a millionaire, I think, if you religiously start when you're a child and you invest for your entire lifetime. It just sort of happens by default because math. And when you're using Bitcoin as the anchor, wow, it really, really happens faster. And so that's the excitement that I see, is that people say, oh, this is for a professional. No, this can be for somebody who's working at a restaurant, that is doing gig economy work for Uber or Lyft. This can be for children. And once you ingrain all of this thinking in kids as they grow up through their productive years and on, and they're passing it on, you get a generation of savers, which is really what Bitcoin is all about. And you get a generation that's being protected from the debasement of currency that we've learned through history from the Greeks and the Romans. And oops, India and China standardized on silver, not gold back in the day. That cost them a century of progress. And I think everybody can do this. And while corporations are their own animal and governments are their own animal, I feel great that Michael Seyr and lots of people like him are evangelizing that for big institutions and big governments. Max and Stacy with El Salvador, God bless them, they're doing amazing work. I think now there's a whole range of folks where you, Robin, and I, Alan, we can change the world and the thinking, and we can program it into people as part of their daily lives, just like eating well, working out, staying in shape. All those things are discipline and conscious choice, as opposed to saying, let me not only spend the money I don't have, but let me finance going to Coachella. And I'm going to somehow productize loans where I'm going to enjoy life now and pay later. People have to understand you are a debt slave. The system is designed for you to be a hamster on a wheel financially for your entire life, unless you want to get out of that trap. Because they're not going to teach you how to get out of that trap. And in fact, the Rockefellers in the 50s and 60s spent $50 million a year training society that it was offensive to women and repulsive to women because men were making money and you're not. The Rockefellers didn't give a damn about women being equal with men financially. They wanted more people to pay taxes, which they're one of the biggest beneficiaries of alongside the Rothschilds and others. And they laughed about manipulating society to think being married or a woman being a mom was somehow bad. That's the dumbest thing I've ever seen. But everyone was trained for an entire generation to believe that nonsense. And it'd be okay if there's now a woman who wants to be the breadwinner and they're a doctor, a lawyer, an engineer, whatever, and the husband's going to be a stay-at-home dad. It could work in that direction. But this concept of family units being bad is disgusting. The concept that we're going to invest in nothing but hookup apps like Bumble and Tinder and Grindr, and then we're going to act like pornography is a great, ambitious, novel thing, and OnlyFans is a core element that, Robin, if you fail in content, you're a guy, but damn, you could just be an OnlyFans creator. And that debauchery is part of the same perversion of money in a different way. It's trying to teach girls not to have any values or morals or ethics. And the concept of like, hey, it's all socially acceptable to whore yourself out for money, either literally or figuratively. It's the same thing. Oh, what's your body count? These are disgusting concepts. I have 5 of my 7 are girls. Beautiful, smart, talented young women. You know, doctors and nuclear engineers and entrepreneurs and business people. And I want to, as a father, to be proud of like, oh, you've got a big body count? Like that's what you're shooting for in life? Like, no, that's not what it's about. So it's about morals, ethics, values, integrity, faith. It's okay. We're in a week of, tomorrow is Good Friday. Sunday is Easter. It's fine to have faith. It's fine to care about religion. It's fine to have moral ethic, values, integrity, and purpose. Like there's nothing wrong with that. The portrayal to glamorize debauchery is done on purpose to distract from the complete perversion of cash and currency and the way the economics and finances of the world operate on purpose, by design, just like sports is a distraction. Media and entertainment is a distraction. We don't have Rome and we don't have the Colosseum and we don't have, people being eaten by lions and getting killed in gladiator fights. We'll just call it golf or the NFL or, something else. And this is all by design. There's nothing accidental about perverting people and perverting currency. It's all part of the charade to keep you on this hamster wheel of debt.
I couldn't agree more. I loved every single sentence you said in the last 10, 15 minutes. I mean, in the last 1 hour, but especially in the last 10, 15 minutes. I know my audience, I think 99% agree also. That's really, really cool. Just on the one discussion before, I'm even a little bit more extreme. Most of my income is already in Bitcoin.
Right.
So I don't even have to convert it anymore. So my fiat income is also increasing, but the percentage of fiat versus Bitcoin income is actually shrinking over time, which is amazing to see. And
Right.
Now I have post-production members that help me push the podcast out. I pay them already in Bitcoin,
right.
Which is awesome to see a line of cash flow that doesn't even touch fiat anymore. But I'm a very special case. I get that.
Yeah, but that's the way to think about it and the way to do it. And once you standardize on it, the thing that's very different. So you're much younger. My kids are younger. When you watch people in their 40s, 50s, 60s, 70s, 80s, the mindset that has been ingrained over their entire lifetime is so different. I've had lots of people, this year, last year, 5 years ago, and beyond, and they're like, I don't believe in any of it. I don't believe Bitcoin at all. My wealth manager said it's bad, and I'm like, well, they're talking their book, right? They're trying to keep your money there. But I said, okay, I go, let's say I am an idiot, like I'm completely foolish. I am not articulate. I can't craft anything that would convince you why, whether it's mathematical or scientific, whether it's historical, whether it's the bad nature of bankers and politicians, whatever it is. Let's say you think I'm completely wrong. I said, all right, do this for me. Trust me enough to put 1% of your net worth of your 100% in Bitcoin. And then every single 6-month window for the next 5 years, calculate the percent of your net worth that Bitcoin represents versus fiat. Because we'll know you started at 1%. It's real easy. 99% over here, 1% here. If this is becoming more than 1%, a year, 2, 4, 8, 10 years, and it just keeps going up, maybe you're going to realize something inherently is broken, is different. In actuality, that doesn't often change what happens with their lifetime because they're in the last 10, 20, 30 years of their life. So it's a little bit different. But what I often see the change that happens is when they're dealing with their estate. Suddenly, somewhere along the line, they just suddenly, like my mom, she buys Bitcoin. She suddenly starts worrying about the Bitcoin she's going to leave for grandkids or great grandkids. That mentality of how I'm going to transfer that lifetime of value gets different. But it does require, much like I said, if you do shit coins versus Bitcoin, you have to be tricked into sending money to the wrong place or losing it during a transfer or losing your keys or something weird to kind of get the concept of custody on one standpoint and the difference between everything goes to zero against Bitcoin and, oh no, get rich quick. But that behavior of get rich quick is because the currency has been perverted. And so when you want all of these physical assets and all this lifestyle, people are more willing to gamble because the currency is so perverted that they're desperate to figure out how to get off the hamster wheel. And they think shit coins could be the answer, which you and I both know are not. But it always takes something to kind of go through. And all of us old Bitcoin maximalists, look smarter and smarter each cycle. But at the beginning of every cycle, we look like the old crusty dumbasses as always. And then suddenly as the cycle plays out, you look smart again and Bitcoin dominance goes up more. So that's kind of the basis of what gets funny. The only other thing is really like getting good at macroeconomics. There's 3 sovereign territories on earth that have their own rules and own jurisdictions that are unique. One is the Vatican inside Rome, which is obviously not part of Italy, but is there. There is the City of London, which is a part of England and the UK, but its own little world. And then there's Washington, D.C., a part of America, but not. And those 3 jurisdictions, ultimately, I think what everyone has to pay attention to is forget physical war. There is a raging financial war happening right now, a horrifically raging financial war. And it is on one side, the Bank of England and the City of London, and by default, the EU and NATO and the United Nations and the World Economic Forum and the big globalist elite on one side. And on the other side is Treasury Secretary Bessent, plus the Trump administration, a little bit with the Fed, but to a much smaller extent. That war is raging. Right before Biden and Harris left, they tried to outsource the entire U.S. Treasury market for market making to the Bank of England. That would have been death, financial death to the United States, because the bid, the ask, the liquidity, everything about the Treasury market, which was the United States' Treasury market, would have been controlled by the City of London and the EU sort of de facto through the Bank of England. And Bessent stopped that. Thank God. But who is Bessent? Why does it matter? Is all this stuff really chaotic? Not one little bit. Bessent is one of the greatest global macro hedge fund managers to have ever existed in humanity. And he did out of London and the London desk for Druckenmiller and Soros all of the foundational work to expose the British pound and to make a fortune shorting the British pound and breaking the currency. Now, why did Trump bring Bessent on to be the Treasury Secretary in the United States? Really, a couple of reasons. One, he knew every attack vector to take down the British pound. And Trump wanted him to use his knowledge of attack vectors and hedge funds of how to take down a currency to defend the US dollar. And in parallel, he said, expose the attack vectors of everybody in China tied to the Chinese currency and the yuan and the RMB. And you need to say, how do we attack the currency in China in the same way that you did to the British pound with Soros and Druckenmiller? So when you watch this macro thing playing out, First of all, Janet Yellen left the Biden administration and they left $10 trillion of short-dated treasuries that had to be refinanced. So our debt goes up through 36 trillion. The interest on the debt is through 100 billion a month, which is 1.2 trillion annually. And now you have $10 trillion to refinance, and where are rates? The 10-year bond is, initially they started trying to impose the tariffs to crater the markets, which worked. And initially, when the markets were cratered, what happened? A flight to quality, sell equities, buy treasuries. All the rampant buying in treasuries spike the price of the treasuries, which plummet the yield. And suddenly, without the Fed, the Rothschild family bank basically, intervening, they didn't change interest rates at all. But suddenly interest rates were dropping from nearly 5 down into 4 and got down to like 3.85%. Well, that's pretty amazing. If you can actually drive down interest rates because they need to finance and refinance 10 trillion. And so the math, every basis point, and for the audience, there's 100 basis points and 1%. But for every basis point that they can get rates to drop, that saves $1 billion a year. That's a lot of money when you're dealing with up to 10 trillion and a $1.2 trillion interest. So that's really what you're seeing. Now, what was the response when Trump put the tariffs out? That globalist machine, they counterstruck. They started doing the opposite. They started dumping treasuries to drive the price down to immediately reverse the bond yields up. So they went down to about 3.75, 3.85, and now all of a sudden it jumped back to 4.5%. So when you're seeing this whipsawing in the treasury market, which is one of the largest and most liquid in the world, it's kind of like the currency markets. When that's happening, this is Trump and Bessent with his administration over here fighting literally to the financial death, the City of London, the Bank of England over here. And these two groups, the global cabal of bankers, they're dumping their equities to crater the market on purpose because they're trying to make Trump scream uncle and to take the tariffs off. And the tariffs are actually a good thing. In the United States, the tariffs are what we had before the Rothschild Federal Reserve showed up in the early 1900s. We were wealthy. We were producing our products. And what did Trump do? He didn't do anything crazy. He said, we're doing reciprocal tariffs. If you would like zero, great. Then you give us zero. Right now, the way it works is if you're a bank in the United States, you're not allowed to be a bank in Canada. Canada just blocks 100%. You're not allowed to operate in Canada. But we let Canadian banks operate in the United States. That's insanity. Oh, we have all these social media platforms, Meta or Netflix, or take all your favorite stuff. Now X, right? All these things. Well, you're just banned from China. Google doesn't get to exist in China. They have Baidu. Well, okay, how's that fair? So you can come to our market, but we can't go to your market. So this whole thing about tariffs is nonsense. What's really happened is the world has been using the United States as a piggy bank for more than 5 decades, really almost 10 decades, going back to the creation of the Federal Reserve, the IRS, and the FBI simultaneously to enforce debt collection. That whole nightmare, we don't need any income taxes to pay anything in the United States. We can use tariffs. And the tariffs, if you want zero, give us zero. That's it. But if you're going to charge us 25%, we're charging you 25%. Oh, also, if you don't want tariffs at 25%, your other option is invest in America, create production in America, employ Americans, and you'll get 0% to sell to our market as well. So this big outrage is fake. The outrage is because if you're getting free money from around the world and you have for decades, why do you want it to go away? You don't. You love it. Wow, we're charging them 100% and they're charging us 5%. Those idiots. And they say this out loud. They know it's stupid. If you're in Austria, right? You're over in Germany, you're BMW. I have a BMW. But take BMW, Audi, Mercedes. We can't take our vehicles there Elon Musk can't take Teslas overseas, but everyone gets to come here. Try to take your car and go to Japan. You're not allowed to sell your car in Japan. Japan only allows, Mitsubishi and Nissan and others and Honda. That's what you buy. Well, so I think it's great that they're doing what they're doing. The real target is actually China, but the reality is that everyone can have great deals, and that's why you're now going to see probably a deal every couple of days with countries around the world. They're going to renegotiate all the trade. They're going to allow all the tariff money to flow in, and then they're going to start telling the United States, because I don't know if you know this, being overseas, I keep hoping for World War I to end. You know why? Because then they'll take away income taxes, because income taxes were going to end at the end of World War I. If only we could just end World War I, right? And also, when they first came up with taxes, only 7% of the United States population was ever supposed to be taxed. And the amount they were supposed to be taxed was a sliver. They used to fund war? They would have to do war bonds. And then you and I would either buy the bond, and they had the money to then do the war, or the American public said, yeah, we're not interested in war. No thanks, I'm not buying the bond. You don't have funding. Guess what? You can't have war. That's another great thing about Bitcoin. So I think people globally need to realize that the real battle is between the globalists and the nationalists, which is why in Europe you see, the wrong person won in Romania. Let's run to the courts and overturn the election result. In Germany, the wrong party is getting too popular. Let's ban them. In Brazil, the wrong person's in charge. Let's ban them through the courts. And you're seeing this worldwide, and I think it's up to humanity to say, enough. I don't beg you for my God-given rights. I don't beg you for my inalienable rights. I don't beg you for my Bill of Rights. And we're not here to be subservient to a bunch of slave masters globally. There's $5 trillion in the Saud family. There's $3 trillion in the Rothschild family. There's $1 trillion in the Soros family. I don't care. You're not our master. You're not our God. You're not going to stand here and tell us what to do. And so that battle is really the difference, this mass immigration. When you look at tariffs, there was a great thing done, and I'll then stop on this little tirade of sorts. There was $10 billion of tariffs that were added to China during Trump's first term. MIT did a study about the results of those tariffs, because it was like 10% tariff. And what they found is that of the 10%, 0.7% became the uptick in the actual prices in America. 0.7 off of 10%. And why? Because countries ended up paying the tariff and the corporations ended up paying the tariff. And they didn't pass all that along. All that happens is when you're Nike or Apple or any of these big Fortune 500 companies, they're optimizing globally, which is why they're aligned with the globalists, of source everything to maximize revenue, minimize expense, maximize profit and shareholder value, right? That's the game. Well, if you're Nike or Apple and now you're going to have to pay tariffs, what's it going to hurt? It's not going to hurt the Americans. We're not going to go suffer at the, buying things. What's going to happen is that Apple and Nike are going to be less profitable. Their earnings per share is going to contract. Who cares? As Besant correctly says, the stock market is a Mag 7 problem, not a MAGA problem. Wall Street has feasted. Now it's time for Main Street. None of this is accidental. They're going through tariffs first, taxation second, and third will be deregulation. And they say it out loud. They tell you, here's exactly what we're doing and why we're doing it. And all the outrage you see is not organic. It is fake. It is funded. It is literally people that are hired to protest. It is people that are hired to virtue signal. And I don't know if you saw the most funny development is 4chan, the big conspiracy theory site was shut down over the last couple days. And they discovered through the hacking that it was basically a Mossad honeypot operation where the most posts in the history of 4chan come from Israel. So you have to always laugh when you see the lack of arrests and convictions of Epstein clients, Diddy clients. The greatest thing everyone in your audience, if they've never read, should be One Nation Under Blackmail. Not One Nation Under God, but One Nation Under Blackmail by Whitney Webb, who literally had to flee the country. It was amazing she was able to publish with all the receipts and not get killed. But the whole 2-volume set is about the intersection of Wall Street, banks and central banks, U.S. politicians, including Washington, D.C., organized crime, and intelligence agencies. And once you sort of see it all, you can't unsee it. And the other great book I suggest people read is Confessions of an Economic Hitman by John Perkins, which will show you from an insider who was an economic hitman how the U.S. uses the unlimited credit facility at the Federal Reserve, which the only group in the world that has access to that unlimited credit facility is the World Bank. And the only group the World Bank gives it to is the International Monetary Fund. And then they give it to all non-G7 countries to debt enslave them. And this is where Bukele and El Salvador were very smart about regulating. But the IMF loans is under the premise of, hey, we're going to rebuild your infrastructure. We're going to build energy grids. We're going to do all this great stuff. We're going to build ports. But it's really designed to give you too much debt so you can't repay it. And then we strip the natural resources, the gold, the rare earth elements, the oil, the gas, and everything else. And when they can't pay it back, we take their ports, we take the infrastructure, we take the assets, we actually force them to drop a military base in. They vote with us in certain initiatives politically. And that is the methodology that's used. So once you kind of, start with liar's poker to understand wealth management, throw in One Nation Under Blackmail to see how anything they can't get done legally, how it's done illegally. Then you throw in how you actually use economics and money to debt enslave the world through Confessions of an Economic Hitman. The only other book you need to survive in life is The Bitcoin Standard from Seyfried Amos. And just read through the first 7 chapters to get the history of money and currency and all these things of what was the rise and fall of empire after empire. And then you finally have this found foundation with a Bitcoin standard. And hopefully I've provided at least some tactical, practical steps to say, my strategy is to be sovereign and free and off the debt hamster wheel. And I've given hopefully some tactics that are easily understandable, whether you have $1,000 or 100,000 or $1 million, doesn't matter. And then just stay religiously disciplined to it and good things happen.
That is an amazing ending point also for the podcast. And it was really an honor to speak with you. You brought some really great insights into there, I think. And I have like 1,000 more questions. Maybe we can do a second round in some time.
Yeah,
and go deeper.
Do that if you have an interest. That's fun.
Absolutely. I think this episode will do very good. I have a gut feeling about that. I have one question that I ask each and every one of my guests. And the question is, what can we learn from you besides Bitcoin?
The thing besides Bitcoin, I think that you can learn from me is that anyone can make it and make it big in whatever big means to you. If you can make sure that you have strong morals and ethics and values and integrity and work ethic, literally anything is possible. I started from zero. My father and my mother never went to college. They were wonderful. They provided for us. They provided a great family unit. They gave us a base, a foundation. They gave us the ability to care about the American dream. And they also held us to account and forced us to work for it and made us understand that nobody in life owes you anything. If you don't like your situation, go look in the mirror and you'll know the reason why. And anyone can choose to have fun, or you can choose to study more, or get up earlier to work out, or to be a little more disciplined in what you eat. But all of these things are personal choices and motivation. But if you don't feel sorry for yourself, you don't go down this path of debauchery and degeneracy and all these other things. What I love about Bitcoin, which has to intersect with this, but came much later, it gives you a sort of a beacon of hope, and it gives you a foundation. Eat well, work out, love your family, be based, live in reality, and then just work your butt off. So the one thing is that if I can do this, literally anyone can do it. You can choose to work hard and study hard to get good grades that can then open opportunities for you to then get an education, which then you can do well to then have an opportunity to get more education, to get careers. And if you focus on being very strong of written communication, verbal communication, and you're a student of history, you can arm yourself by just throwing yourself into stuff and learning. But you have to do it for you. No one's going to do it for you. And I meet everyone in the world that wants the lifestyle probably that I now have and others I know. I can tell you with certainty, people complaining about the situation they're in is typically because they're whining about the results they don't have for the work and the activity they didn't put in. There aren't free lunches. Do the work. The harder you work, I assure you, the more lucky you will get.
Yeah, this is the ultimate teaching of Bitcoin, the responsibility, and the same thing. I think a lot of people have a hard time grasping the concept of self-custody and holding your own key. Because if you lose your key, if you lose your Bitcoin, the access to your Bitcoin, it's totally 100% on you. I feel with everyone that went through that, but it's totally on to them.
Right. Yeah, no, that's a whole separate dialogue people can have about that. But take that responsibility, learn how to do it, get the redundancy built in geographically. You know, I live in Austin. I wouldn't dream of having anything tied to any Bitcoin I own anywhere close to myself. You have to have it in different states, different safes, different banks. I make sure that there's nothing anywhere where I'm at because I don't want any issues tied to myself, my family, my kids. So you have to learn how to manage that as well. And as you grow in life and, get married or have children, you suddenly have a whole series of issues of what happens if I get hit by a bus? And then how do I make sure that I never have anything close to me?
Really, really inspiring. Thank you so much. We have a small end routine in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you an interesting question, has nothing to do with Bitcoin, and you can take it in so many different ways. The question is, at what point does life really start?
Wow, that is a very loaded question. At what point does life start? So honestly, I think when I look back in my life, and you owe a million things to a lot of people, whether it's your coaches, your teachers, your parents, and all the people that take care of you from when you're zero to somewhere where you're intellectually sort of grabbing and making a decision. For me, the point of life that started for me was when I got in trouble in the 6th grade by being stupid and taking a razor from a pencil sharpener out of the little plastic holder, and I slashed the plastic covers on some library books while I was at school. No rational reason why I did this. Thought it would be funny, all those kind of things. But life started when I got suspended from school for 2 weeks for doing that. Ironically, my mom was an assistant helping at a junior high library, so it was even more kind of stupid. But my life for me started when I realized not only how dumb it was, what I did, and there was no reason to do it, but then when I came back from that 2 weeks of being suspended, I had everyone I knew almost was like challenging my own existence of what a dirtbag you are. You know, you're not who I thought you were. You're like, why would you damage something? You know, all these things. And instead of getting angry about that, I looked at myself in the mirror and said, I'm not that. I'm going to be a millionaire before I'm 30. I am going to show all these people that they're wrong about me. And from that day forward, I got straight A's through 7th through the 12th grade, and the rest was history. And I realized that there were a lot of people through that were a lot smarter than I ever could have dreamed of being. But I realized that I outwork anyone. And that was the flip of a switch in my life of when life started. And then the rest of it, you get into having your first child, you know, separate from your own accomplishments, like you having children or multiple children and seeing their accomplishments, enjoying being older, seeing what your parents did for you and appreciating. There's all that other stuff. But everyone needs that one trigger that just changes everything for why they do what they do and who they become. And for me, it was what could have taken me on a bad path, and it reversed my whole life. And then I got very focused from that point on.
I love that answer a lot. Really cool. Thank you so much, Alan, for being on the show. Before I let you go, where can people find you, ask you questions, and reach out to you?
Sure. So on X, it's just at Alan Knit. So ALANKNIT. I didn't realize, but apparently there's a few people who put up something close to that used my profile and my picture. And so I've got a few fake X people that aren't me. So mine is just ALANKNIT. And anything else you see is wrong. That's probably the best place for people to find me and communicate with me. And I try to keep up as best I can. And I guess if I had a question for your next guest, we would like to say, how do you handicap the odds that Bitcoin becomes the world's global reserve currency? And based on the percent of likelihood, if you think that's going to happen, what year does that happen in?
Oh, that's a nice one. Really cool. Thank you so much also for the question already for the next one. Thank you so much for taking the time. And as always, I put your link to the Twitter so people can go directly to the real one, not to one of the imposters on Twitter there. So thank you so much for the time. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.